I'm starting the webinar now.
Recording in progress.
Good evening, everyone. I want to welcome you all to the Tax Resolution Help Center. My name is May. I will be hosting today's session and introducing today's speaker. I will also be coordinating the Q&A chat session at the end of this session. I want to congratulate you all for taking steps to deal with your taxes. Taxes from all sources, including income tax, payroll tax, property tax, excise tax, and sales tax represent a 35% to 60% reduction in your personal savings and wealth. As you probably know, those with 1% of the wealth in this country have experts to help them pay a small percent of tax. Our goal is to help you reduce how much you pay in tax by educating and informing you on ways to reduce past, present, and future tax expenses. We think you are entitled to live a happier, healthier life by keeping more of what you earn and getting the taxman off your back. Our goal is to provide you good information with the opportunity to ask questions that are important to you. The presentation itself will last about 20 minutes plus 20 to 30 minutes for you to ask questions by chat. I will select the questions and present them to today's expert. If you wish, you can include your first name and your state. That would be great. Other than that information, your identity is not mentioned. The information you are receiving in this session is not specific tax advice. If you want specific tax advice for your situation, you are free to contact today's expert or any of our tax expert at Tax Resolution Help Center. As you know, these group sessions are included in your do it yourself membership fee of $20 per month. If you are not yet a member, please sign up today. We need your financial support. And to better understand what might be on your mind during the session, I might include some pooling questions to ask you. I will then finish with a 5-minute wrap up. Also, a survey will be sent looking for your feedback. And finally, this session will be recorded. The topic for today's session is everything you need to know about tax payment plans, installments, agreements, and offer in compromise. And the tax expert for today's session is Jared Smith. Jared, Jared has been a CPA for close to 20 years, where his experience spans state and local governments, nonprofits, individuals, and small businesses by providing accounting, budgeting, financial, IT, management, pension, tax, and other services. While he believes taxes are important for our government to function and provide the needed services it does not believe we should be paying 1 cent more than is required and enjoy helping his clients find ways to optimize their tax situation. With that said, introducing Jared's Mouth.
Thank you, May. It's a pleasure to be with everybody tonight. If you've come the past couple of weeks, this is the same presentation. I will be branching off into the different areas when I have more time to develop those presentations, given the tax season right now. I'm kind of tight on time, but I'm grateful to be with you tonight. So with an offer in compromise, what is it? What is an offer in compromise? It's an agreement between the taxpayer and the IRS to settle a tax debt less than what the full amount. And there's three goals that the program wants to achieve, that the IRS wants to achieve with this program. A resolution that is in the best interest of both the taxpayer and the government, to collect what can reasonably expected at the earliest possible time and at the least cost to the government, as well as secure revenue that may not be collected through any other means. So basically, they're saying, we don't think we're going to get the whole liability, all the taxes that we feel the taxpayer owes. Let's get as much as we can without causing undue harm to the taxpayer. But and let's work together. Let's come up with a compromise. both sides need to compromise. And so, just like any creditor, the government encounters these types of situations where they're not going to be able to collect everything, but they want to collect what they can. And it's fully acceptable business practice for the government to enter into these offers. So additionally, they really do want to help the taxpayer. You have a fresh start. I don't think they're people like us, and so they really want to help out. You may get once in a while get a crotchety old person, but um, most part, the people who work for the IRS want to help the taxpayer because they're the same as us, and they want you to feel you want to get the burden of owing taxes off your mind and moving forward in a direction that keeps you compliant. But we all have to be able to work together, and the IRS recognizes their part in that. So there are three types of offers: the doubt as to collectability, doubt as to liability, and effective tax administration. I'll explain each of those. Doubt as to collectability is when taxpayers are unable, after financial analysis, to pay their liability in full. If they have the debt, but they don't have the means or the resources to pay off the full debt. And that's the most common type of offer. The DTC offer must equal or exceed the taxpayer's reasonable collection potential in order to be acceptable. And we'll talk a little bit about that later on. Doubt as to liability is basically the taxpayer does not agree with what the IRS is saying they owe. It's often routed to examination after they are received. Your offer should only include the tax years or periods in question. There could be 1 year where a tax was calculated you don't agree with, but there could be another year that you still owe taxes, but that's not DATL type of situation. So when you submit a DATL type of offer, it should only include those tax years where the DATL applies. Split up the DATC and the DATL, and it's submitted on a different type of form. Effective tax administration is a situation where a taxpayer owes the amount and they have the assets, the income to pay the liability in full, but due to special circumstances, requiring full payment would create an economic hardship or simply be inequitable. Let's say you had, you have retirement savings, you've saved, and you owe this big tax debt. If you were to use all your assets to pay your debt, you're not in a very good situation, and that would create an economic hardship. So you have the money, but using all that money to pay off your debt would put you in a hardship position. And an inequitable situation is the example down there, you paid your taxes through a payroll service provider and they misappropriated those funds. They used it for something else. Someone stole it from the company. So it wouldn't be right for the IRS to require you to pay the tax again. However, it is also important because they will look at what you've done already. An offer is not the first option. They want to see first, are you able to full pay it? Is there evidence that you can pay the full amount without any economic undue hardships? And there are no other circumstances for the two different types of the first two offers. Can you borrow? They do expect us to take advantage of borrowing, and if it doesn't create an undue hardship, they're also be able to pay off the debt. You have assets that can be liquidated reasonably. I'm not going to expect you to sell your home and go live in your car to pay off your debts, but you have other assets that you can liquidate and help pay down your tax debt. And then an installment agreement. This is probably the most common way. It's kind of like a loan. Um, it's an arrangement you have with the IRS to pay it off over time. And so, but you still have penalties and interest that continue to accrue. And if they don't feel you can make the full payment in a collection statute expiration date, it's normally 10 years, and you're able to pay it, they'll let you enter into a payment plan. So how are the offers calculated? Um, they look at your net realizable equity and assets. So if you have, again, assets, they look at what's the quick sale value, which is not necessarily fair market value. Fair market value would be higher than the quick sale value. It's basically what can you sell these assets in a fire sale, in an auction or something quick to get the money less any amount you may already owe on it that is lien holds with priority over the any federal tax lien you might have on it. Hopefully you haven't gotten to that point. And then any applicable exemption amounts that you have. They look at your future income, an estimate of your ability to pay based on analysis of gross income less necessary living expenses for a specific number of months into the future. And then they deduct out your allowable expenses. And these are expenses that meet the necessary expense test. Basically, things that an allowance that you need to survive for your family's health and welfare and to produce income. You're self-employed. What do you need to keep your business running so you can continue to make payments and not be in an economic hardship? There's two basic types: the allowable living expense. These are based upon your national and local standards, family size, food, clothing, shelter, all those things. So they're not going to necessarily allow you to maintain the lifestyle you're living if it's outside of those ranges that they feel are acceptable within your geographic area. So you're going to need to cut back if you have to. And then there's other necessary expenses that could be unique to your situation. You have childcare, student loans, things that not everybody has to deal with. But they look at those on a case by case basis. And again, it's a compromise and negotiation. You're negotiating with them, and you can say, "Hey, I have these expenses. I pay, like, basically I take care of my parents. I pay my parents' rent or something, or their medical bills, something that's unique to your situation." They'll look at that and consider it. And how to submit an offer. There's different forms. There's that booklet that gives you instructions and guidance, and there's different forms that need to be filled out. There's a $205 application fee, if applicable. And what I mean by that is if you meet certain income limits, that can be waived, but you have to make sure you check the box correctly on the forms and provide documentation that you would be eligible to have it waived. Then you have an initial offer payment, if applicable. You basically do the legwork. You come up with this plan and you present it. You offer the compromise to them based upon the forms, based upon your analysis of your situation, and you present it to them with an offer. Say, here's what I'm willing to give you. They look at it all. They make sure everything, all the T's are crossed and the I's are dotted, and they make sure they analyze your situation, and they want to make sure that you're being honest. There could be people that are dishonest, but you're thorough, maybe not negligent on reporting some things. And so that's where they start working with you. There is a pre-qualifier tool, there irs.gov, that will assist you in determining that amount, help you walk through the numbers, do some analysis and some estimates to help you provide a most likely acceptable offer. Just but don't no guarantee that whatever the tool tells you that this is the basic life cycle. There's certainly much more involved in these within these 7 steps. So you send the offer, you have to mail it. They will not take any electronic signatures. There's no way to electronically file it. You have to send it to New York or Tennessee based upon where you live. They do require an original signature. What signatures they refer to, no electronic signatures. They review it to see if processability determination means they check it to make sure that the application is complete and thorough. They don't at that step they don't look at the numbers. They just look at the application and make sure everything is there in order for it to proceed forward for the examiners to review. And that's where it goes into step 3. They load the offers into the system so other people have access to it, and then it assigns it to different holding queues. The centralized OIC is for regular individual taxpayers and other similar entities. Offers in field OIC are businesses and different types of entities. Then it goes through the investigation, and then it goes to the closure. And the process usually takes about 6 months. Could be a little bit longer, a little shorter, depending on everybody's involvement and how thorough the original application was and how quickly and accurately you respond to their inquiries. Some helpful hints. Stay filing and payment compliant. Remember, these offers in compromise are to help you take care and settle past debts, to get those out of, take care of those, but it's expected that going forward, you're gonna get compliant and stay compliant, and so you kind of need to be heading that direction already when they talk to you about your past stuff. You make sure you include the fees and applicable payments, respond promptly to inquiries, value your property and assets accurately. Um, the required documents that they expect should be current and within 6 months. And then explore all collection options, utilize the tool, and complete the financial statements and forms carefully, include all the proper forms and checklists. What it does is it obviously helps them do their job easier, so they're not wasting government time and money. There's enough waste in the government already that we as taxpayers need to help not compound that. Then this last one, irsvideos.gov OIC steps you through the whole process of the forms. It's very, very informative and very good resource to have. But the key to this situation, key to getting out of this and staying out of this is a budget. You need to be able to live within our means and come up with a budget that works. And that's something that they will also be looking at. They want to be able to see a budget that's been put together and going to be used. So with that, I will turn it back over to May to review the questions or share the questions, and we can go and from there.
Okay. All right. Thank you for that, Charlie. Yes, we have a question. We receive it from our Zoom, one of our attendees. This is from Amber, and her question, I guess this has already been answered, but um, her question is, do I have to prepare a budget before the IRS will agree to write off all or a portion of my tax debt?
I see your question before I part, meaning whether you have a formal detailed budget that you follow or what, but there's going to be a formal budget that needs to be discussed and presented because that's the analysis, right? They're going to look at your income and they're going to look at your expenses, and they got to be able to see the bottom line of what you have. Do you have anything left over after you deduct all of your expenses out of your income. So there needs to be a budget, whether it's a formal budget you've been using and put together, but the forms and the application, it's going to be a type of budget. It may not be in a format that you're used to, but it's a budget basically is your income minus your expenses. What do you have left over, and what's the detail to whatever degree you want within those categories.
Okay, thank you for that, Jared. I guess the follow up question for this is, since Amber can actually do a budget and present it to the IRS, let's say they will not approve it, they will offer something different, a plan, a budget plan, and let's say Amber does not agree with that. Can Amber actually counter offer that? Is that something that a taxpayer can do, or does Amber need someone to help her do the budgeting?
You can, depends on your comfort and your desire. If you're not comfortable with the numbers, if you're not comfortable with negotiating, you may want to have someone help you.
Mm,
There are many people. We are here today because you joined the Tax Resolution Help Center to get help to do it yourself or to do it with help or have someone do it for you. So whatever level you're comfortable with, you have resources available to you.
okay. All right. That's great to know then. Yes. So let's see if we have another question. This is from one of our Facebook Live audience. Give me one sec. Okay. This was sent through private message, and her question is: does the state of New York and California offer a tax compromise program like the IRS does?
I think every state, I'm not familiar with California and New York personally. I mean, I could do some research and figure it out relatively quickly. But I think every state will have some type of some type of program to help taxpayers.
Mm,
And again, they would rather get something than nothing.
thank,
And I think everybody wants to do what they can and help everybody out.
mhm. Okay. Thank you, Jared. So I guess we want to make sure in the program that we educate also our viewers that IRS is not someone that who wants to drag them down, but of course they are willing to help taxpayers to be able to pay their tax, right?
Yes, that's the whole purpose of this program.
Mm-hmm.
We're not in a third world country where they can come drag you out in the streets and whip you and take all your assets and put you in jail unless unless they want to do that. And I'll share the story. Just I've shared this before, but a lot of the organized crime that are being put away, a lot of it is not necessarily because they found guilty on the crimes themselves, but they have been found guilty of tax evasion, and
Mhm.
so they put them because of that. You know, the Untouchables movie is a one. It's a great movie that talks about how that happened.
That's great to know then.
I know.
Okay. What do you think that you can advise tips from to our viewers that they should do to avoid this to happen in the future?
Well, again, having a budget from the beginning will help us to avoid these situations because, especially if you're self-employed and you don't have something you need to plan for throughout the year, and I would recommend that if you have taxes, a little more, maybe a little bit less than that in the end, but at least you have it set up, pay it quarterly. There's a lot of unexpected taxes. I have a client who was trading a lot of cryptocurrency, and he would move things. If you're familiar with the terminology, he would move coins in and out of wallets, or he would actually exchange them from one coin to another because he wanted to fit them in different wallets, and you couldn't do it with certain coins. Every single time that you exchange it for another coin, and it's not just if you move it from wallet to wallet or ledger to ledger, that's not a taxable event. But when you trade it for a different coin, that's a taxable event. He ended up having to owe about $15,000 that surprised him, rightfully so, because of all these taxable events that he didn't understand at the time were taxable events. He certainly understands it now, and has said, "I'm not going to do any trading for the next couple of years." But so it's important to understand when we're dealing with income and investments and trading, selling things. Technically, we're supposed to report anything that we barter too. I'm not going to
Mm.
jump to that extreme. But like if you trade services with someone and you benefited more, you're supposed to tax yourself. You're supposed to report the difference of your gain as tax in your taxes. So, I mean, those are the letters of the law, but I don't think anybody follows everything to the letter 100%. We just don't know, and it just doesn't register, doesn't make sense. But it's important to understand the taxes, get advice. If something feels kind of, I wonder if this is going to cause me to pay taxes. Get some
Mm.
advice.
Okay. All right. So it's a basic rule that every time that you will be earning, you have to think also how much will be the tax, or is this going to be
Yeah.
taxable?
The government wants their piece of everything you make, so that's something to think about.
Okay. So, well, that's very much informative from you, Jared. Thank you so much. Anything else, though? Because that was actually the last question that we have for today's session. Pretty.
No, I think that's it. There's a bunch of great sessions during the week on different topics. I'll be doing one in about a half hour on blue collar taxes for tradesmen and other people. And I do a white collar one on Tuesday mornings. There's one on crypto that Kelly's doing. There's some great less sessions, great advice,
Yeah.
and some great people.
I totally agree, especially with crypto, right? There's a lot of sorry, the zillennial, I'm not sure, the new generation right now that are into investing online, like such as crypto.
Yes.
Mm.
Yeah.
All right, then. Well, that covers our question and answer portion for today. And that's it for today's session. I want to thank you also, Jared, for you both devoting your time and also sharing your expertise and provide us your actual examples when it comes to doing their taxes and offering compromise as well. Anything else, though, before I say goodbye?
No, thank you for joining us.
All right. Thank you, Jared. Have a wonderful evening.
You too.
All right. I want to also thank everyone for joining us today and sharing your time with us and joining this session. I want also to make sure, we want to make sure that we're able to help you in reducing your taxes and also increase your wealth. We do this with a tri tax method of DIY, do it yourself, DIT, do it together, and DIA, do it all. Three methods, one solution to reduce your stress from no IRS or state tax debt and a happier, healthier life. If you are not yet a member, please join us today. For only $20 per month, and we need your support to continue to offer more of these sessions. And since it is now tax season, we want to make sure that we provide you with a great We have many sessions to help you do a better job of doing your taxes yourself. And of course, if you want help, we